Great. Good afternoon. Good morning. Afternoon it is today to everyone. It's Heather Buchanan here. I'm Chief Executive and co-founder of Bankers for Net Zero. We are a week and a half into our time at COP here. It's been a fantastic and chaotic experience all at once. So I'm sitting here with Gavin Starks from Icebreaker One, who is very kindly and helping us with our SME work stream. And so we're just going to sit and have a very casual chat about data, the importance of data, and just how big of a gap that I guess that there exists, particularly at the bottom end of the supply chain. So Gavin.
Thanks very much. Well, I think just to frame the scale of the challenge, maybe to begin with. So we've got over 5 million SMEs in the UK. They employ over 14 million people. It's about 2 trillion worth of contribution to the economy. And really the footprinting and the greenhouse gas reporting from that part of our financial ecosystem isn't there. It's estimated at best. And when larger organizations are looking at their supply chains, it's very difficult to do the scope 3. That's all estimated. And so when we're looking at the loan infrastructure and the function of the banks within that and their liabilities and their potential liabilities around taking their financial instruments to net zero, we have to get better data from that ecosystem. So the first order challenge is, how do we get better data from the SMEs in the first place? And how can we do that without it costing them anything, really? Because they definitely don't have the time, and we don't want to have to educate everybody in the process as to what to do. We really need to automate it as much as possible. And then once we've got that data flow, what happens next? What are the incentives, both financial incentives, what technologies and processes can be brought to market to help accelerate the drive to net zero? So it's a very knotty problem. There's a lot of challenges on everything from the methodologies right the way through to the corporate reporting and how these things get factored into ESG reports and beyond. But there's lots of opportunities here. So there's a huge opportunity to connect some of the data that is already out there from across supply chains and bring it to market in a way that ideally will make it easy for the SMEs to participate. So.
Excellent. And I think that is one of the things, I mean, as Bankers for Net Zero, obviously, one of our biggest focal points is how do we make sure that businesses in the UK are as supported as possible during the process of decarbonisation. And as banks come under pressure to get their balance sheets and their financed emissions down to net zero, how can we use them to support? And this is really the beginning, the kind of hypothesis we started with in the first instance. I mean, I'd be curious. So we've obviously launched this work stream. We've already done a scoping exercise. The plan is that we get this built, piloted, and launched as its own entity by COP28. Are we being unrealistic on timescales?
So that's a great question. I think that my background is also in startups. So I think we need to take what I would call a minimum viable product approach. What is achievable that can be good enough that we can then incrementally improve upon as we go? So, for example, one of the ideas that we're exploring is, can we get the energy consumption data directly from the energy companies that are supplying the SMEs? Can we get that directly into the carbon accounting tools that the banks are using? Now, we're fortunate in the UK that we've got a couple of different bits of this jigsaw on our fingertips. One of them is open banking, which is a standard that's already used for data sharing across the banking system. And we've been developing at Icebreaker One, we've been developing open energy as a way of making it easier to share energy data across the whole of the ecosystem. So there's a potential in that to automate scope 2 reporting, which is purchased energy. And that might be, again, the hypothesis here is that good enough for a first pass? Could we, if we create the wiring, if you like, to enable that to be automated, what would the next most useful piece of information be to drill into that? But we have to link this to the materiality of the impact at the other end. So if banks are going to create different loan instruments, there'll be carrots and sticks in there. We obviously don't want to be in a position where a bank has to deny access to capital for that through lack of data. But at the moment, there's huge error margins on the estimates across the whole of the SME sector. So if we can build a better starting point here of getting access to that, say, scope 2, and then if we create the wiring well, we could look at that not just annually, but we could look at it monthly. So if you were a bank looking to lend around, for example, a heat pump, you could actually see the impact of that come through the data flow on the energy consumption. And if we do this again well, and we need to involve the auditors in this process, we could create an assurance around that data. So I think there's many sort of parts of the jigsaw, but the building blocks are here. How do we create an assurable and verifiable data flow that can link to a material and evidence-based set of data flowing from the real economy into the financial economy? And then how does the financial economy receive that? What carbon accounting standards need to be used around that? How do we then blend that with other spend-based analytics and so on to build a better picture? So it's a really exciting moment. I think we've got a lot of the building blocks here, and the challenge will be to go far. We have to go together. But I think the opportunity here is that within 12 months, I think it is possible, at the very least, to demonstrate that this can work, and ideally take it a lot further. But in terms of the kind of baseline idea of could we provide the mechanics of automation here, yes, I think we've got enough there. I think with the right development on policy, which is an open question as well, whether there may be a role for regulation in here, that we could see how that could be then rapidly scaled up. What we saw with open banking, that's now regulated by the Financial Conduct Authority, so it's mandatory across all the major banks. That's led to a huge amount of innovation in the UK and beyond. And so the sort of international dimension and repeatability of what we do here, right at the heart of what we're wanting to do is, can we create something that's very easily scalable?
And I'm curious just around in terms of getting that asset level data for energy consumption, are there any barriers there to that? And I'd be curious to know what those are and how do you think we can overcome that? And also I mentioned this to somebody recently, a parliamentarian, who said that it felt a bit Big Brother-ish. How does data protection come into all of this?
Absolutely, and the right questions. So maybe to answer them in terms of barriers. So as part of our national strategy in the UK, we have an energy digitalization strategy. So the whole of the energy sector is becoming digital. That's in flight. But again, let's take our MVP approach. Before we get down to asset level data, can we just get the billing information? And can we get the kilowatt hour usage that is just on the bills as a starting point in a machine readable format, so the machines can do the work? If we can get the machines to do the work, then we know that it's very scalable. So that information does exist. It may exist in different silos at the moment, but there are ways of connecting that in the work that we've been doing with SSE. For example, we're working across the organization on their data strategy. And so this could be a very useful catalyst, an exemplar to sort of bring it to life. What's the point of all this data sharing? Does it have an impact? But it does come back to there are lots of questions in here about intellectual property, around privacy, both at an organizational level and potentially beyond. We'll come back to the potential domestic use cases here as well. But when we come to look at the energy consumption of businesses, we need a consent management process. The way that open banking works is if you want to share your bank statements with a third party, the data controller, if you like, in the middle of that, which is the business whose information, whose bank statement it is, they have to explicitly give consent to share their data with a third party. So I think here the opportunity is to enable the SMEs to click once to say, yes, we consent to sharing our energy data with this reporting framework directly with the banks, so that when they log into their online banking, maybe we get a pop-up and it says, this is what we're doing, do you consent? We'll run the trial for 3 months and we'll switch it off again. So de-risk it for everybody so that we can say that, can we engage in this? Can we demonstrate it? Can we work out where those issues are, where the data rights issues are, where the privacy issues are, and so on. And I'm confident that we can navigate that because we've got an exemplar in open banking that does work. And this equally, it could extend right down to the domestic level.
So in terms of I'm just going to delve a bit deeper into this. So if you're an SME and you've got different bank accounts, does that mean that you share your information twice and each of the bodies then holds your information separately, or is this all going into one space? Because you could see us being in a position where we've got all the SMEs across a variety of different lenders with all the information quite fragmented. How does that work?
Sure. So that's a really good question. And one of the examples of how open banking has enabled us all to have better visibility of our own banking is there are applications where you can basically give consent to access all your different bank accounts. And those, like, for example, software as a service accounting packages, we can connect them with every bank, bring that information in together, and automate our VAT returns. That's something we're quite familiar with now as SMEs. The opportunity here, I think, is when we look at the ecosystem that's developing, there are software as a service carbon accounting firms. And so the same principles apply. We can aggregate, although those software services can aggregate from the different energy suppliers, but with the consent of the individual company in this case. So that can provide that holistic view and a holistic carbon account at the Scope 2 level, and that can be assured. And this assurance piece is really critical. We need to build trust in the data. So knowing that the data has come from a particular source at a particular time, being able to verify that, and then knowing which methodology was being used to turn that energy consumption data into a CO2 equivalent. Now, whether or not we end up using the national averages, or whether or not we can integrate with the real-time carbon measures of the national grids, these are all questions at the moment that we have to consider in the development of the methodology. Because I think here what we could see is, again, a real opportunity to start bringing together the more granular data over time to accelerate the adoption and impact of from the financial community. So here, working with the SaaS vendors and working with the ledgers to say, how do we integrate this into the workflow? How do we create those relationships with the banks so the banks can then get visibility? But also, once we've gone through that whole process, can we give the reports back to the SMEs? Can we go back to them and say, well, we've started the thing for you now. Here's a broader carbon calculator and get you on the journey. So really, it's about kickstarting this and then saying, well, all of you are wildly different when it comes to Scope 1 because you're doing different things. But if we can automate this and get the ball rolling, then I think it could really scale very quickly.
Okay, so we're certainly not looking at this as something that necessarily replaces all carbon calculators. It's more of a foundation point that people can work on. And what will that mean for the other software companies and carbon calculators that are out there and trying to make their way in this space?
So I think it creates the kind of marketplace that we've seen emerge around open banking. There are hundreds, I think it's over 700 fintech companies plugged into the same open banking framework. And some of them are looking at balancing of budgets. Some of them are looking at managing your financial spend better, or helping you to find a better mortgage. So here, it's really about unlocking the baseline information so that the many applications that are out there can help SMEs move forward. But we've got to take it one step at a time. We've got a brilliant use case here and a need. We've got to base this around user needs. The user in this case are the banks. The banks need better information in order to unlock capital. And we've got a user need in the SMEs is they need access to capital. So there's a perfect storm there of needs. So if we can make that process easier and demonstrate the wiring of how we can automate this, we can say, well, we've shared it once for this purpose. Would you then like to share it again for this other purpose? And that purpose might be some smart AI or something that kind of looks at your consumption patterns, looks at your spend patterns, and says, actually, we could recommend some technologies or some interventions in your business. It's got nothing to do with the banks, but helps them work out what their road to net zero is as an SME. Now, if we can do that, then the SME can then share that data back with the bank. So you can start to see this kind of virtuous cycle of creating value for different parts of the ecosystem, ultimately helping the SMEs decarbonize for lower cost, helping the banks understand the risk and the financial community be able to report on that risk, helping the SaaS vendors who are providing the intelligence work out what to do with all this information and turn it into intelligence, and then help connect that into the low carbon technologies and solutions that are out there so that people can deploy them and have them funded. So it's quite a big ambition, but I think I'm super excited for this initiative because we've got the user needs on both sides of the chain here, and the energy companies who are ultimately in the mix here also have an interest in helping their customers to decarbonize. There will be material impacts on people's energy bills, which is obviously another significant driver. So helping to move this whole sector forward, everybody can benefit from better access to data. And I think just to really cement one point, in this kind of architecture, the data isn't centralized. It's not sent from, we're not going and harvesting all the information. That's come back to your big brother question. It's not all being harvested. The information is flowing directly from, say, the energy company to an accounting firm, but it's controlled by the SME. So the SME is in control of the data flow, but then there's derivative information that's produced, which helps the whole market move forward. So we've got to look at this as in the round really as we're all in this together. And so we need to work out where there is reciprocity in that system, where we're creating a value exchange that the SMEs are benefiting, the banks are benefiting, and the people providing the intelligence and the infrastructure in the middle of that can also create sustainable and growing businesses. So I see it as a huge opportunity.
So do I. Obviously, everybody say this. I think one other kind of key stakeholder in here that we have yet to mention is actually is government itself and our Department of Business, Energy and Industrial Strategy, or the devolved government, certainly in the UK, who are trying to reach SMEs and finding it really difficult to get them engaged because they're time poor. And I think one of the things that we certainly thought about with this project is the one thing that, we've identified three things, I guess, that SMEs have in common, and that's they all have an energy source, even if they don't have a direct relationship with an energy supplier. They all do their taxes, and they all have bank accounts. And bank accounts are, I guess, the area we've identified that opportunity for engagement and also signposting because there is such a wealth of information out there that's incredibly confusing for people. If we can get people we're obviously, as Bankers for Net Zero, we're a Race to Zero accelerator, and we sit within the kind of GFANS and Net Zero Banking Alliance framework, and making sure that ecosystem is consistent and pointing in the right direction, I guess, is key. And so one last question for you, and something that we've been asked quite a few times on this is this just going to be for carbon? Is there a way that you start to measure the S element? If we're talking ESG, there's a lot of metrics around E, but S is something that people are already starting to grapple with, and G. So what are your thoughts on that?
Gosh, that's a much bigger question. I think if we look at the scale of the challenge ahead, just on addressing this one starting point, once we've created the rails for that, we start to build trust, and we could draw a parallel there with open banking and how it's evolving into open finance. So open finance is now starting to cover pensions, insurance, investments, and so on. So there's an expansion of that sort of horizon across sectors. But if we'd started with open finance, we'd have been sitting here for the next 3,000 years trying to work it out. So I think it's more about, for me, finding this minimum use case, demonstrating we can get the rails right for that, for the data to flow and for people to feel that they're in control. So this consent process is critical to the information sharing. But once we've established them, we can start to add other data. Now, whether that's additional Scope 1 information, or whether it's looking at other environmental information, looking at biodiversity or other natural hazards and things like that that will exist within those ecosystems. That will, I think, one of the first users, if you like, outside of the banking sector will be the insurance sector. And again, I look at this really as a kind of a careful journey. You've got to build trust along the way. So when we look at other areas like the S and the G, I think we've got to start by saying, you know, it's a multi-sided marketplace. Who are the beneficiaries on each side of this? Is this a government push? Like, do we need to mandate things if people are just stuck and not reporting something? Or can we create this kind of market dynamic where there is a pool from different parts of the system? There's a user need, again, here on the banks, there's a user need in the SMEs. And I think it'd be really interesting to explore how to expand on that. And where there are gaps, that's where regulation has to step in and say, well, we just need this information to build an equitable society. So I think that does that maybe address some of those questions. I would finish with just one kind of additional point about scale. You mentioned the GFANZ accelerator piece there. If we get this right as a demonstrator, this can scale internationally. And Icebreaker One, we're part of the Mission Innovation Energy Program there that was set up to deliver the Paris Agreement. That's the secretariat for that is co-chaired by China, Italy, and the UK, and the UK has the lead on data. So we've got multiple rails to take this out on, both through the GFANZ umbrella and through other Paris target-related initiatives, and we're already getting interest from around the world about this program. So we're keen for people to watch what we're doing. Everything we're developing will be openly licensed, so the frameworks and so on will be published openly. And the comparison again with open banking, the UK led, there are now over 80 countries developing it. And open banking itself is now projected to be a $150 billion market. So there's plenty of commercial incentives to get involved. Businesses need to lean in here. There's a huge set of opportunities for innovation, but ultimately this will help us deliver our net zero targets.
Well, thank you very much, Gavin, for joining us. As you can imagine, we've got a busy year ahead of us, and I hope that this time next year we're going to be sitting in Dubai, having kind of incubated and proved our MVP and getting something out to the market that can be replicated. And it's a very good point. We've been speaking with numerous other countries about this, and the interest, because there is a very, very clear gap in this data flow, has been immense. So we're really excited to be working with you on it and look forward to Dubai next year.
Thank you very much.
Thank you.